Welcome to Alpha Recap. Holly here, and I'm joined by Brittany. Happy Monday, everyone. We're back after the Martin Luther King Jr. day break with a packed backlog of market-moving news that dropped while the tape was closed. Ready to dig in?
Absolutely, Holly. Hi, everybody. Brittany here. There's a lot to unpack. Analyst moves, AI getting more verifiable, defense and industrial deals, and even some clinical traction in medtech. Let's walk through the headlines and what traders should watch when markets reopen on January 20th.
First up, a note that's likely to ripple through the electric vehicle universe. Jefferies put a spotlight on XPeng and its pivot into what they call physical AI. That got the research desks and EV-focused money talking about a potential growth re-rating.
Yeah, and that phrase, physical AI, is catching on. It's basically AI that controls or augments hardware in the real world, like driver assist systems, sensor fusion in cars, or robotic controls. Investors care because when AI moves out of the lab and into cars, credibility, safety, and measurable outcomes become critical for valuations.
Exactly. So what Jefferies is doing is saying, if XPeng can show repeatable, audited performance in those systems, the market could re-rate the company. In plain English, prove it works reliably and investors pay up. What I want to see is product timelines and numbers. How many cars, which features, and what the expected revenue uplift looks like.
Totally. And on the theme of proof, another headline that ties into this is from Vitology Innovations. They released full performance metrics for more than 89 classifiers on their veterinary imaging platform and invited independent validation.
That's a big deal in healthcare AI. Lots of companies claim accuracy, but publishing classifier metrics across a wide set and asking for outside validation is the kind of transparency that reduces adoption risk. Hospitals, specialty societies, and payers want to see third-party confirmation before they sign big contracts.
Right. So we've got a clear theme. AI moving from lab demos into productized, auditable use cases, whether it's cars, medical imaging, or even trading agents in crypto. Speaking of crypto, OpenLedger announced a partnership with Theoric to deploy verifiable AI agents in live decentralized finance markets.
That one could be huge. The pitch is auditability. If you can prove exactly how an automated agent behaves with real capital, that removes one of the biggest barriers for institutional crypto flows: custody, compliance, and predictable execution.
And remember, decentralized finance runs around the clock. Institutions need reproducible behavior and attestation for risk controls. If OpenLedger and Theoric can produce pilot results and third-party attestations, that could unlock treasury and custody use cases that have been on the sidelines.
So those are the AI threads. Let's pivot to corporate governance and analyst moves, things that can spark quick reactions. Morgan Stanley pulled its bull rating on LVMH while markets were closed, which sent the luxury complex into a near-term risk phase.
Analyst calls like that matter a lot for high multiple premium consumer names. Luxury stocks are sensitive to sentiment and to assumptions about margin expansion. When a big brokerage rescinds a bullish view, expect not just the name, but peers to get repriced, at least in the short term.
Contrast that with Coca-Cola HBC, whose shareholders approved all proposals at an extraordinary meeting. That's a governance clearance that removes execution risk, quieter headlines, but important for strategy continuity.
Two governance outcomes, two different market effects. One reduces headline risk and lets management proceed. The other raises headline risk and can concentrate volatility across the luxury sector. Traders should watch for follow-up research notes from Morgan Stanley and how other brokerages react to LVMH.
Now, on the industrial side, we saw some resilience plays. 6K Additive was named preferred supplier to AGF Defcom to convert manufacturing scrap into high-performance metal powder. That's a recycling pathway that can secure feedstock for additive manufacturing.
Recycling scrap into certified powder reduces dependency on single suppliers and helps control input cost volatility for defense and specialty manufacturers. It's exactly the kind of supply chain resilience companies need right now, especially where raw materials matter for performance and certification.
And GSE Solutions acquired Ideal Concepts to bring enterprise IT and data management capabilities into its nuclear engineering work. That's digitization of capital-intensive energy infrastructure, bringing recurring software revenue into engineering services.
That's a classic cross-sell and margin protection play. You're packaging engineering knowledge with software tools that customers use every day, which creates stickiness and predictable revenue. Investors should watch for disclosures on contract size and integration plans.
Healthcare had another tangible data point. Smarty Denti Technology reported 100,000 mandibular repositioning cases in 2025 and said production capacity is ramping for global expansion.
Usage metrics like that can be a leading indicator of revenue before any big financial disclosures. If they've treated 100,000 cases, that suggests real world adoption. The next step is watching for distribution deals, payer relationships, and revenue recognition.
Let's not forget the market signals and short-term trading stats. That ultra-short semiconductor ETF was quoted down about 3.9%, with very heavy quoted volume during the holiday. Heavy pre-market quotes can translate to large moves when trading resumes.
Exactly. When you see heavy quoted volume in a short or leveraged product heading into a holiday, it's a volatility signal. Expect concentrated trading, opening gaps, and fast derivative flows on January 20th as desks unwind or lean into those positions.
Quickfire highlights to summarize what dropped while the market was closed. 6K Additive named preferred supplier to AGF Defcom. Coca-Cola HBC got shareholder approvals. Inspirational Endeavors launched an executive resilience cohort. GSE Solutions bought Ideal Concepts. Jefferies flagged XPeng's physical AI pivot. Morgan Stanley pulled a bull rating on LVMH. That semiconductor short product was down about 3.9% in the latest quote. Vitology published classifier metrics and invited validation. OpenLedger partnered with Theoric on verifiable AI agents in DeFi, and Smarty Denti Technology reported 100,000 clinical cases.
Great recap. Now let's connect the dots across these stories. First, verifiability and third-party validation are popping up across sectors. Medical AI, DeFi agents, and automotive AI all need auditable performance before big institutional dollars move in.
Second, capital-intensive industries are layering software and recycling or resilience capabilities to protect margins. Think nuclear engineering adding enterprise software or additive manufacturing securing feedstock through recycling.
Third, analyst calls and governance clarity will continue to drive concentrated price action in consumer and luxury names. We just saw that with LVMH and Coca-Cola HBC.
And the timing matters. All of these headlines landed on a holiday, so expect clustered reactions and higher realized volatility at the open on January 20th.
So, what should listeners watch tomorrow? High probability catalysts? 1. The market reaction to the Martin Luther King Jr. Day backlog, opening gaps, volume spikes, and derivative flows. 2. Any formal note from Morgan Stanley explaining the change on LVMH and follow-ups from other brokers.
3. Jefferies' full report on XPeng. Look for product timelines, addressable market sizing for physical AI, and any quantified upside. 4. Follow-ups from 6K Additive and AGF Defcom about contract terms, volumes, and timing. 5. Integration plans from GSE Solutions on how they'll commercialize Ideal software in nuclear fleets.
And 6. Independent validation results for Vitology's classifiers. Any commentary from the professional societies will matter. 7. Pilot results and audit attestations from OpenLedger and Theoric showing how verifiable agents perform with real capital. 8. Price and volume behavior in semiconductors and that short product as traders digest the heavy quoted volume.
Let's close with clear takeaways for investors and traders. 1. Prioritize companies that can demonstrate repeatable, auditable performance if you're investing in AI-driven products. Audits and third-party validation reduce adoption risk.
2. In industrials and defense, watch for supply chain resilience moves like recycling feedstock and software integration. Those can protect margins and create recurring revenue. 3. Monitor analyst notes and governance outcomes closely for consumer and luxury names. They can trigger concentrated moves.
4. Expect higher realized volatility at the open on January 20th because a lot of this news hit during the holiday. Volume and gaps are likely, so size your positions with that in mind.
And 5. Follow the follow-ups, pilot results, audit reports, contract disclosures, and broker notes. Those turn strategic announcements into measurable revenue and risk outcomes.
All right, that's our roundup. Thanks for listening to Alpha Recap. Brittany, any final words?
Keep your alerts on for those follow-up releases and watch how desks price risk into the open. We'll be monitoring the tape and bringing you the highlights.
Good stuff. We'll be back with more analysis as the market digests all this. Until next time, Holly and Brittany signing off from Alpha Recap.